Hello, hello, hello. I can see everyone's joining us. We just had load shedding go over. I know by the flicker of the lights, but it looks like we're all good. I've got my business partner, Shane, here. So him and I are running this together, and hopefully if you lose me for anything, Shane will jump in. I know that he's hoping that doesn't happen. So anyway, Shane, thanks for setting everything up. Deeply appreciate it. And thanks to everyone for joining. You know, we do this monthly. We do try and do it at different time zones to accommodate different people, because we've got people from all over the world that are interested in this topic. And what's interesting is that we do it sort of once a month. And then depending on what happens in that month, you know, generally people ask questions or lessons I'll learn, and we update it, you know, not hugely, because the core fundamentals of investing don't change. But some of the processes and some of the ideas and the thinking and you know, often when someone asks me an important question, like I'm going to explain tonight, I've got 2 secrets to share with you today that no one else in the world has ever seen. So for those of you who are online, you're going to get to see it first. But it's where, you know, I ponder something and I go do the research and I try and figure something out. So where in the world are you coming from? Let's start engaging. Let's start having some fun. I can see that we've got Kerry here, we've got Peter. So where in the world are you all coming from? I'm really excited. I'm actually off on a mastermind, or not a mastermind, what do we call it? It's called Leadership in Nature with Kerry next week for 3 days, which I'm deeply excited about. So it should be really cool. So we've got Zambia, we've got Hearties, we've got Dubai, we've got Pretoria, we've got Newcastle, we've got Namibia, Newcastle in England. So nice spread of people from around the world. Always hard to know. We got McGregor. Always hard to know when in the day, depending on what different time zones we work on. So I want to get started. Thanks to all of you for joining us. I hope you enjoyed it. And for the people, we got Germany as well. Interesting. Pietermaritzburg. So what's interesting for me is that we are going to be sharing some stuff today that I'm very passionate about. It's really close to my heart, and something that I believe is very important in terms of where the world is. I don't know if you saw just today, something was posted over the weekend. Now, again, we've got people from all over the world, but just to use an example of a country, SARB, the South African Reserve Bank, literally made a change over the weekend, which is going to make it a hell of a lot more difficult for people to get money out of South Africa. And what's interesting, I mean, that's no different from the decision England made around Brexit, or, you know, America makes about its decisions. So this is not about a specific country. It's how quickly things can change overnight. And it's why diversification becomes such an important principle, because you really can't rely on any one country, any one economy, any one asset, any one, you know, system, pretty much any one monetary system either. So that's what we're going to be discussing today, is Diversification 5.0 Masterclass. The 5 important lessons that we've learned from some of the wealthiest, sophisticated investors. And I want to share with you something that is interesting to me. So this is credit to my business partner, Shane Ferreira. And I wrote this book in 2014. It was actually endorsed by Clem Sunter. And the reason it was endorsed by Clem Sunter is he's one of the top 5 scenario planners around the world. I built a 4-dimensional model, which I put on top of his scenario planning to help make better decisions of where to invest in the world. So my logic was, I'd already been investing since 1999. We'll go a little bit more into my history just now. And I'd heard Clem Sunter talk for years and years and years. And I was like, but this is ridiculous. Like I walk, and I know everyone else does, 200-300 people walk out the room and they go, oh, that's great. Those are Clem's scenarios. But what do I actually do with it? How do I actually make the right decisions? And so I went and built this 4-dimensional model, and it helped me make the right decisions. And I was too embarrassed to share it with Clem for about a year. And then him and I were sharing a stage together. And I just said to him in passing, I said, look, you know, I have this model I've built on top of your scenario planning. You know, would you mind if I share it? And I'll never forget, 2 days later, he got hold of me. He said, Scott, like, you really need to write a book, and you need to share this with the world. And I've run 3 comrades. If you don't know what the comrades are, it's the longest ultra distance marathon, 1-day marathon in the world. It's about 90 kilometers, 60 miles. I've run 3 of them. I can promise you I'd rather run 3 marathons back to back or ultra marathons back to back than write another book, because it was a horrible, difficult process. Very, very, for someone who doesn't, for me, like attention to detail, whatever, it was mind numbing to go over and over and over and over again. And even though I tried to write the book, a gentleman called Roger Hamilton actually helped me write the book, gave me the idea on how to write a book and taught me to do it. And he said to me, whatever you do when you write the book, make sure it's evergreen. So I wrote the book to be evergreen. So the system is evergreen, where to find the data is evergreen. But it was also based on my experience up until then. And a lot has changed in 10 years. That book came out in 2014. So although probably 80% of the principles are still accurate, a lot has changed around the world. And also the book is primarily based on residential real estate, residential property. And what I've learned over the last 10 years is there's a whole plethora of other asset classes beyond residential, so beyond houses and apartments, that we investors need to know about and that we should be investing in. And what I've also learned is that there's a whole bunch of fundamentals that I've, enhanced dramatically in my own learning, understanding, knowledge, and investing over the last 10 years. So what I'm quite excited about, and this was Shane's idea actually, is we're going to launch a new course called Wealth Going Global. And no one even knows about it yet, because literally we finalized it yesterday. Because a bunch of people have been asking me to do an upgrade of the book. And I said, there's no ways I'm writing another book. I refused. But what I will do is I will do a digital version. So, effectively it's Wealth Going Global 5.0, and it's the book Property Going Global, which was primarily about residential property investing around the world. It's an enhancement of that. It's going to be the residential, it's going to be the commercial, it's going to be the other alternative assets. And we're going to be running this webinar or this masterclass on the 16th of May. And I'm actually really excited about it. And just by the way, completely side note, Shane is incredible to start off with. And he's taken all the knowledge, and we actually use ChatGPT to build out the whole course in terms of how it's going to work. And it's phenomenal because a lot of the information sort of lies here within the book, and or it lies within my head. But with Shane's help and by asking the right questions, it's phenomenal how ChatGPT helps you build out the structure. So I'm super, super excited to be sharing this. I'd make sure that you're signing up to it. Now, I don't want to get away from today, because for me, one of the things that we find, and I'll talk more about our mastermind later, but I'm ever evolving and learning with our mastermind group. It's a small group of people that I work closely with. And when I realize that there's gaps or things that they need, then, I look for ways to actually solve that for them. And one of the ways, and one of the things that I've been thinking and working with Shane was how can we, ensure that some of the fundamental pillars are in place. And that's one of the reasons that Wealth Going Global is about to go digital. So this is a hard copy. If you want a hard copy, I suggest you buy this, because there will never be a second version in hard copy. I can promise you that much, because I'm not writing it unless ChatGPT is prepared to write it for me. So I want to start with a question and get people's brains engaged. What would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? So just take a minute. What would that mean to you? What would it mean to you in your life? What would it mean to you? And actually, I can see Kerry's online here. He asked me a question. He said, well, what about if I'm already earning that? Is there any point in listening any further? And I was like, well, I'm just saying 5. What about if you want to double it? What about if you want it to be 10? What happens if you want it to be 20? I don't care what the number is. I'm saying, what would it mean to you in your life if you're wanting to build a passive income, but specifically without the hassle or the complexity? And I think that is something that I've learned over the last 10 years, is that the ways we've been taught in the past are significantly complex, and there's much easier and simpler ways to do it. And then the second one is, how would you like a system that will help you get there 5 times faster, simpler, and safer? And again, this is not based on my opinion. It's literally a way to do it. Now, let me give you an example of what I mean. So my son has just managed to learn how to use a PlayStation. I don't know if this is a good thing or a bad thing. And he was playing this Viking game, and he couldn't find like a scroll. It was either a sword or a scroll. I don't know exactly. And he spent a couple of hours literally trying to find the scroll. And he couldn't find the scroll. So the next thing he did, he goes on his cell phone, he goes on YouTube, he finds someone that knows how to play the game. And in literally 5 minutes, he figures out where the scroll is, how to find the scroll, and to get the scroll. And I think it's really, really interesting, because I think a lot of people in our lives, all of us probably, try and, it's a great metaphor for all of us, where we're out there and we're trying to figure it all out ourselves. And it's hard and it's difficult and it takes time. Just like my son, 3 hours trying to look for the scroll. And then he's went on YouTube and learned from someone that had already done it before. And suddenly he, could find it in 5 minutes. And it's quite a good metaphor for life. Which one are we going to be? And so there are definitely systems that we can copy. What are we about? Well, we're about, helping people live a life unlimited and doing it through Diversification 5.0. And as an example, that article that came out this morning, I'll share the article if you're interested with me, where, it's a very negative article about the future of being able to move money out of South Africa. And, for someone like myself that has been investing overseas since 1999, it's like, that's a problem. And it's probably going to be a problem for many of my clients. It's not a problem for me. And that's the peace of mind of diversification if you've been doing it for 20 years. And I hope today to share with you that, you can have that same peace of mind. So let's start with a story, and I think it's quite important. So this is a story of two brothers. Now, the first brother, it was 1976, and Zimbabwe was in trouble. And in those days, it was called Rhodesia. And basically, this gentleman decided, right, it's time to leave the country. So without any planning, he literally packed his car. You couldn't take anything out of the country except for what was in your car. They actually had this car that looked very similar to this. I think it's a Renault something. Anyway, they packed whatever they could in the car from Zimbabwe, and they left Zimbabwe and they drove to Durban. And again, very reactive, completely at the mercy of a country, an economy, a social and political environment. And I'll talk a little bit later, but lived a life that was very reactive, and unfortunately it didn't end well. The other brother decided, no, I'm not going to leave. So in 1980, at the age of 30, he started investing offshore. And he spent 23 years being proactive. So he invested offshore, invested in first world assets, first world income. And in 2003, he decided that it was time to leave Zimbabwe and to immigrate to Australia. So if you tell me that you can't move to Australia when you're over 50, my uncle did it. And how do you do it? Well, you can buy your way into a country. It is possible to be able to do that. He bought a house for cash. He sent his kid to one of the top schools in Queensland, in Brisbane. And actually, the kid got offered scholarships through rowing to some of the best universities in the world. And the part that I tend to joke with a lot, but he never had to work for an Australian. Okay. Now, this is really important, because if you work your whole life and suddenly you immigrate, and I've met a gentleman personally, this is not another person's story. I personally met this person where they worked their whole life, and he said, I was a general and now I'm a foot soldier. Like, I don't think there can be anything worse, in terms of that process. So that's the difference between being reactive and at the mercy of a country, a political system, a social system, an economic system. By the way, this is not about Zimbabwe. This could be America. This could be England with Brexit. Or being proactive. And by the way, there's no such thing as a get-rich-quick scheme. You've got to be proactive. This takes 5, 10, 15, 20 years. But when you do it properly, and you get to decide, do you want to be the first brother and be reactive and at the mercy of external, things that are actually out of your control, or be proactive and have the peace of mind to know no matter what happens, you have a solution. And so my question is, which one do you want to be? Do you want to be the reactive brother, or do you want to be the proactive brother? And you get to make that choice. You get to make that decision, for yourself. So this was the reactive brother. It was my father, actually. And, this was me on my first construction project when I was 13 years old. And what was really interesting is that my father did what we were all told to do. You know, he went to school, he went to university, he worked really hard, he got a great job. I mean, he became financial director of a listed company. He invested, he paid his taxes, and yet when he died at the age of 59, he died broke. And I looked at that as a young man, I was 17 years old, and I went, that doesn't make any sense to me. That life that we're all taught to do makes no sense, because, you know, ultimately, when you go and look at the statistics, 94% of people at the age of 65 in England, Australia, and America will be the same as my father. They will be dead, broke, or reliant on the government at the age of 65. 5% of people will be financially independent. Now, a lot of people go, woohoo, I want to be financially independent. But the problem is, according to the financial industry, you actually earn 25% less than your last paycheck. And as an example, I'm not going to mention the person's name, but someone quite close to me, he's an optometrist. He's worked his whole life. He's done everything right. He's 81 years old. He's very healthy. And, you know, when I had lunch with him fairly recently, like, he's got a major concern that he's going to live much longer because he's running out of money. That doesn't make any sense. And so literally 1% of people win the race, which is just ridiculous if you think about it. Because, you know, not 100 of us are starting the race, 99 of us are not even literally finishing the race, and only one person is finishing the race in terms of this process. So I decided to do it differently. I'm sure many of you out there have done this. And I went out and I did all the courses. You know, I read the book, where is it? Rich Dad, Poor Dad, you know, and all about the cash flow quadrants, and Real Estate Riches by Dolph DeRoos, and Money Master the Game by Tony Robbins, and Unshakable. And I've got courses and courses. Oh, another one here, Think and Grow Rich, you know, and I even tried to write my own book on it to teach people, Property Going Global. And, you know, for me, what I realized was that was the greatest challenge, because I learned all about this active income and this passive income and the employee and the S and the B and the I, and I don't have time today to go through it. And it was all about how to get to the how. And this is when I learned my greatest myth, because for me, I thought I had to do it all myself. I literally from literally at university, I started reading all the books. I started doing all the personal development. I went on all the courses. I have 2 degrees. I don't say that to be arrogant, but I do. Cum laude in construction management, so construction, property, finance, economics. I have a master's degree in construction technology, which is all about the property and the real estate industry. I have a CRS, which is Certified Residential Specialist out of America. I have ARPP, which is the Association of International Property Professionals out of England. I have PDP out of South Africa, which is the Property Development Program by the Business School. Like, literally, you name a course, I've done it. Okay. You name a degree, I've done it. And then I've done all the personal development stuff. I've read all the books. I've been on the courses. I've done the coaching work. And I thought, right, I need to do all of this. And if you read this book here, you know, Real Estate Riches, it literally said, well, the way to retire is you go buy houses, and, you know, you need to go look at 100 houses, you make an offer on 10, you get accepted for 3, and you buy 1. So I did it. And I went out and I bought 16 houses on my own. And my word, did I start to realize that there was a lot of hassle out there and a lot of things that I hadn't been taught. And it was really hard and it was really difficult. And I bought a lot of rubbish. And that's when I learned my greatest myth. It was like this epiphany, because I thought I had to do everything on my own. And like, I'm going to do this a lot today. Like, they're the people that think they've got to do everything on their own. And then I realized that, like, if I could get the right information and the right partners, like, life would just be so much more simple. So I could do it all on my own, and I could try to find everything, and I could try to find all the deals, and I could try to do the management, and we could spend the next 2 hours talking about funny stories of bloody tenants and their rubbish. And by the way, it's not a South African problem. I've had houses in America burned down to the ground. Okay. And, you know, or you could just get the right information and partner. And what I'm going to share with you today is my epiphany, like literally a game-changing epiphany over the last 10 years. And it's why I'm so excited that Shane's getting me to doing Wealth Going Global, because it's a massive upgrade on what's happened over the last 10 years. So where did this all start? Well, that was that first project that I was 13 years old. It was my first property project that I actually worked on. I then did my first property development when I was 22 years old. We bought a house in Cape Town, South Africa, renovated it into 6 townhouses. We then did our first London property at 24. We bought a semi-terraced house and renovated that. And then started a company when I was 25 called International Property Solutions. And we effectively helped thousands of people invest into property in South Africa, hundreds into London, hundreds into Australia, and hundreds into America. But what I realized over time was that the real challenge that people, have is that the middle class and the professionals are investing in residential property. And the real money, the top 1%, are investing in different assets. And the 99%, you and I generally, do not have access to those investments because we're stuck in country. There's massive barriers to entry, whether we're talking commercial property, commercial real estate, or international real estate, or even other alternative assets. And that's not even taking into account all of the complexity and difficulties with legal, banking, trust, compliance, partners, blah, blah, blah. And so, for me, this is when we realized the significant problem. And it really dawned on me in 2009. There was a development and an opportunity by Barrett Homes in Wimbledon. So if you know where tennis is played in Wimbledon. And these units we could buy at a 50% discount. And I actually sent this email out, 40% discount. I sent this email out to my investors. I had 2,500 investors at the time. And I said, look, it's a 40% discount. It's an 8% yield. And if you look down the bottom here, I said, I don't care what happens with market values in the short term. This represents a real opportunity. Now, this was 2009. We just had the crash. That's why Barrett Homes was in deep trouble and was prepared to sell significant discounts. And there was one small problem. There were 48 units, and I had to buy all 48 at the time, and I needed 10 million pounds. And I thought, well, this can't be that difficult. I mean, this is a no-brainer of a deal. So I went out, and I literally spoke to all my investors, and I said, this is a no-brainer of a deal, like we should invest. And I could not get people to work together. And I literally was like, this is like so frustrating. And it was really where I started to think to myself, I've got to stop buying individual units, and I've got to start partnering, because the only way to really get into quality assets. Now, to give you an example, we were going to buy these units for £160,000. Okay, so that was 2009. How much do you think those units are going for now? Anyone? Take a guess. $3 million. So I would say, Craig, that's probably a little bit high. I'd say conservatively probably about 750. So somewhere between 750 and $1 million. So they've at least quadrupled in value. But what's more important is they would have been positive cash flow from day one. And, for me, this project created so much pain personally that it helped create that entire epiphany moment. The second pain point for me was a medical project in Australia, in Bondi Beach, Sydney. I met 2 very wealthy gentlemen. Again, I was like, well, what are you investing in? And they said medical. And I said, why medical? And they said, well, think about it. No matter what happens in the world economy, people need doctors. Secondly, doctors never leave their premises. And thirdly, doctors are very good at being doctors, but they're not very good accountants. And so they sign good long-term favorable leases. And I was like, well, that's a no-brainer. Like, I've got all these degrees. Why has no one ever taught me this? And anyway, so I was like, well, how do I participate? Same problem, 5 million Australian dollars, tried to go to investors, couldn't get them to participate. And to be honest, it created so much pain that we went out and created Wealth Migrate. And Menno, I know that you've said here you wanted to understand what's going on with Wealth Migrate, and I'm happy to talk more about that at the end. But for me, Wealth Migrate is a passion project that launched effectively in October this year. It would have been live for 10 years. And we did our first commercial project in 2014. We bought 6 medical buildings, a portfolio of $16 million. And this is where my life changed completely from an investment perspective. Because beforehand, I was out there trying to do everything on my own. I was in residential. I was dealing with tenants and broken toilets and hassle. And then I went to commercial property and getting the right information and partners. And I just saw, my eyes open to an entire new universe that I hope to share with you today. So since then, we've done quite a lot. We've got members in 178 countries, investors in 71 countries. We've facilitated just short of $1.3 billion in terms of deals. We've had over $100 million go through the platform and over $30 million be paid out in dividends and exits. But what I'm excited about is that I believe that if you're coming from a place of diversification, you can't be standing on a stage saying, London's the best place to invest, London's the best place to invest, like it's impossible. Because no market, no country, no asset class is always the right place to invest. So what I've learned through the years is by diversifying and whether people are interested in America, England, Europe, Australia, South Africa, I don't believe people need to choose anymore. And I think that is what becomes so important. So when I look at why people diversify, having done this now for 20 odd years, the first one is wealth preservation. They want to protect their wealth. The second is they want to have a plan B. They don't want to be stuck, and again, remind me to find that. I'll actually look for it now quickly. Give me 2 seconds. Where was it posted? Here it is. So this was literally posted this morning. Well, I saw this morning. It was posted on the 1st of May, but I saw it this morning. Around the whole exchange control thing in South Africa. So that's exactly what I'm talking about. It doesn't matter what country you're in. Governments can change the rules overnight. The third one is peace of mind. And having the peace of mind to, literally know that you're not reliant on any one system, any one country, any one asset class, or any one partner. And then finally, it's about freedom. It's about the freedom of choice. It's about being able to make the right decisions for you and your family, no matter what is happening in the world. Now, we live in fascinating times. We've still got the Ukraine war. We've got inflation at a 40-year high. We've got, interest rates rising all over the world. We've got fuel price rising all over the world. We've got the stock market all over the place. And if you live in South Africa, you've got load shedding just to add to it. So, it's a very, very uncertain time. And it doesn't matter who you talk to, no matter where you talk to them in the world, there's a huge amount of uncertainty out there and a lack of understanding as to what to do next. And that's why we talk so much about diversification, because having looked at some of the wealthiest investors from around the world, this is not the first time that the world has been through something similar to this. In fact, it happens every 8 to 10 years. And when it happens, you can either bury your head in the sand, or you can copy what the wealthiest investors do. And I actually got a fascinating stat that was shared with our mastermind participants 2 nights ago, where we had a private session. And statistically, if you invest during a recession, you'll be 30% better off than people that sit on the sidelines waiting. And I thought that was really, really interesting. And for me, what's critically important when one looks at diversification is you have to diversify across countries, currencies, assets, partners, and time. They're the 5 pillars of diversification. Ultimately, the goal is diversified global passive income. That is what you're wanting to achieve, diversified global passive income. And how do you do it? Well, my philosophy is through smart investing. I've got a smart watch, as I'm sure you probably do. I've got a smartphone. I've got a smart TV. I've got a smart laptop. Why am I not using technology to do smart investing? And so, I get people coming to me all the time, and they say to me, but Scott, I've been watching you for 10 years. I came on a webinar or I came to a live event, and some of you that on this, masterclass might even recognize yourselves, because I've done hundreds, if not thousands. I've got no idea how many presentations I've done around the world. and to rooms of people, teaching them about how and why to invest and where to invest and what to do. But what's fascinating is so many people get the information and they don't take action. And, you know, whether it's smaller rooms or whether it's live on stage to, you know, I think the biggest I've spoken to is about 2,500 people. Literally, without fail, people come up and they say, I watched you, I heard you, but I haven't done anything about it. And there's very, very few people that take the action. You know, this was a session with Brian Walsh and Roger Hamilton, with some of the top entrepreneurs in the country. We've done, you know, literally breakaway or retreats around fires with wealthy people and you know, again, at game reserves, where we're always talking. And what I tend to find is that the top 1%ers are the ones who are prepared to go out and to get the right information, to find the right partners and to take action. And the 99% of people are the one that turn up, they get the information, and they then tell themselves why they can't do it, or they make excuses. You know, there's plenty of people that have, you know, been coming to webinars since 2008. You know, whether it's Neil Peterson or Dolph DeRuis or Clem Sunter, and yet not taken action in terms of the process. And so I found this fascinating. You know, according to Harvard, in 3 months from now, if you take from this webinar, you'll be able to remember less than 10% of it. Okay. If you basically are part of like a group, like a community or whatever, and you're kind of learning while doing, etc., then you're gonna start to experience kind of 32 to 65%. And if you're part of a small, tight-knit group that literally is working on this daily, weekly, monthly, you know, ultimately you're going to get to 95%, close to that knowledge transfer, and effectively the 100%. And this is really interesting because I always say there's 3 types of people. There's the ones who want to do it on their own, and statistically they've got about a 10% chance of success. There's those that want to do it in a larger group. We call that our wealth hackers, by the way. And they've got about a 30 to kind of 65, 70% chance of success. And then you've got those that want it done for them. They want someone holding their hand. They want to get out there and get the results 5 times quicker, simpler, safer, and faster. And they've got a 95% chance of success, according to Harvard. And what's really interesting is that that's the whole principle of a mastermind and why they're so effective. So I did this whole document in terms of the pain of not taking action. And I think it's quite important, basically, because I'm going to share with you later the value, the return on investment when it comes to, you know, deciding whether or not you should be taking action. But if you're investing $1,000 a month and you're getting an average of about 7% return over 10 years, your future value is $173,000. If you could increase that to 15%, okay, so an annual return of 15%, the difference for you in money, okay, is $102,000. And if you put that into today's money, in present value, so you take out inflation, you bring it into today's money, it's worth more than $57,000. And, you know, people say to me, but I can't afford, you know, to invest, to be able to get the information and to get the right partners, or I don't have the time. And I say to you, well, how much is it going to cost you over the next 10 years? And I'm just trying to show you the pain of inaction. You know, if some of you that are on here had listened back in 2010, you know, who knows where you could have been. And I'm going to share with you even my own lesson, my very humbling and personal lesson that I figured out even last night. And that's why we created the mastermind, was because we decided, and I'll talk more about it later, but we decided that there's a core group of people that want to work together to get the right information, to get access to the right partners, and to get results 5 times quicker, simpler, and faster for themselves. So what are we going to share today? We're going to share 5 important lessons that I've learned by studying literally the wealthiest people around the world. And again, I'm not interested in what the professors are saying. I'm not interested in what TikTok's saying. I'm not interested in what's happening on YouTube. I'm interested in the people that have actually done it. And most often, the wealthiest investors are not the ones that talk publicly. They don't even write books. And so a lot of the time, I've learned this by just observing what wealthy people do in terms of actually investing. And I believe there's 5 major parts. So the first one is trends. Now, this is an interesting one for me because in my book, Property Going Global, chapter 2 was written by a guy called James Painter. Now, I've been following James for more than probably 10 years. I think it's closer to 15 now. And what's really interesting is that he tracks trends similar to how people track the weather. And he did a special session for our wealth hackers and our masterminders a couple of months ago. And he said, in his opinion, the stock market is going to go down anywhere in the region of 50 to 85% over the next 5 to 10 years. Now, he's not the only one that's saying this. There's a lot of people that are saying this. And what's most important about this is that you don't have to agree or disagree with what James is saying. But what you have to be able to find is where do you get the right information to look at the right trends long term. So whether you're looking at currency, whether you're looking at economic data, I'll give you an example. We are currently looking to invest in an industrial deal in Phoenix in Arizona in America. Now, Phoenix has had the single biggest population growth of any city in America for the last 10 years. And funny enough, something I learned from Dolph DeRoos, because like I told you, I tend to go a little bit further than most people. I didn't just read the book. I literally know Dolph personally. I've been in his house personally. I've been on buyers trips with him. Funny enough, he lives in Phoenix. And one of the fundamental principles he taught me was that if population growth is going up, it's the single most important factor as to whether residential and commercial property values will go up, because it's a simple equation of supply and demand. There'll be more demand than there is supply. And it's that classic example of all boats rise, that rising tide rises all boats. So the question is, and just by the way, if you want access to my book, Property Going Global, at the end, we'll share with you how you can get the resources. We'll share with you a digital version of the book. The person that I follow most and the person that I respect most globally at the moment in terms of finance is Ray Dalio. He talks about the major trends that are happening, because what you basically got is on the left, you've got growth, and on the bottom, you've got time. And then you've got productivity. And there's a short-term debt cycle, which takes generally 5 to 8 years. Then there's a long-term debt cycle that takes 75 to 100 years. And what's really scary at the moment is that everything is culminating. We've got a long-term debt cycle. We've got a short-term debt cycle. We've got productivity out of whack. We've got political and social and economic unrest. We've got a global change in power. So this whole sort of geopolitics between India and China and Russia and America and the West. And, I learned about it when I went through Principles. I highly recommend the book Principles. Ray Dalio talks a lot on LinkedIn, like there's a huge amount on LinkedIn. And by the way, I did a wealth hack on Ray Dalio. So again, at the end, I'll share with you the resources, and you can literally get an hour-and-a-half wealth hack on all the trends that Ray Dalio talks about, because I believe that this is the most important thing. He's tracked trends for more than 500 years. And if you're an investor, you need to know that the next 10 years, according to all the trends intersecting, is going to be one of the most tumultuous 10 years that we've experienced in a long time. Now, most people will bury their head in that sand and they'll say, oh my word, what do I do? Let me put my money under the mattress. And yet the wealthy people like Ray Dalio and Warren Buffett say, no, this is actually a great opportunity, but I've got to get the right information. I've got to have the right partners, and then I'll be able to get the right results. So, when you look at the last crash in 2008, 2009, everyone was panicking, and banks were going bankrupt and insurance companies were going bankrupt. And what I learned in London specifically was that everyone looked at this cycle. Oh my word, property prices dropped. So they reckon that in London over a 6-month period, central London specifically, residential property prices dropped 20%. But in my opinion, you've got to look at the long-term trends. So there was a supply and demand impasse. There was more demand than there was supply. And so again, buy those properties in Wimbledon for £160,000. Today, at a minimum, they're worth 700, 750, because it's all about looking at the long-term trend, not about the short-term chaos. And it's within that short-term chaos that the opportunity, really finds itself. So I'll give you an example here. This was a building that was in City Peninsula in Greenwich, which is just next to Canary Wharf in London. And we bought 26 units here. A gentleman by the name of Don actually bought 4 units for cash. We managed to get them at a 26% discount. He had net positive cash flow rentals for the entire period. And last year he sold them for north of £1 million each. So, my question is, and while you're here, who here would like to do the same thing? Buy something for £313,000 and sell it for £1 million, 10, 11 years later, 12 years, whatever it is exactly, 11, 12 years later. But most importantly, have cash flow positive income the entire time. Just say yes. I'd be interested. I'd be surprised if you're not interested. But how do you do that? Well, it's about trends. Okay, so again, here's an article that came out in June last year. Night Dragon is investing $8.4 billion in the Greenwich Peninsula. There's all of this development that's happening. There's 17,500 homes being built, 84,000 square meters of commercial, 20,000 of square meters of cultural attractions. It's literally one stop from Canary Wharf, which is the new financial hub of London. So when you look at the trends, it was like we don't have a crystal ball better than anyone else, but it was common sense. In 2009, it was an up-and-coming area. The trends were all going in the right direction. There was a lot of investment and infrastructure going into the area, and that's what saw the growth in terms of that process. So, so Mitra and Alison, you're the only two that would like to buy a property for 300,000 and sell it for over £1 million. Everyone else, you're quite happy not doing that. This is another example. A guy called Ryan. Ryan bought 5 properties in Australia back in 2009. Australia was the top performing property market in the G20, which is the top 20 economies in the world. So again, we don't get stuck in one country. We look where the best opportunity is based on the data and the trends. And Ryan bought those 5 properties because he wanted to immigrate to Australia eventually. 5 years later, he immigrated to Australia. He sold those properties, and it really set him up in Australia. He now lives on the Gold Coast. He's got his company up and running on the Gold Coast. And, for me, it's a classic example of someone riding a trend, because the Australian property market, and specifically residential houses, had a really good run 2009 through to about 2015, 2016. Another example is Michael and Lee Honeysett. He came on a buyer's trip in America. By then, America was a real opportunity. He came in February 2013, so literally 10 years ago. He started buying houses. I'll never forget, he was very clear on what he wanted. He said, I want to build $10,000 in passive income so that my daughters one day have the freedom to make the choices that they want to do. Anyway, 10 years later, he's literally bought houses. He's invested in commercial property. He's diversified across the world. They're actually immigrating to England at the moment, and his daughters are going over, and he's literally achieved his objective. And what I love most about it is, this is what he said to me. When I joined, it was the best money I've ever spent. So but again, there's no such thing as a get rich quick scheme. This was in February 2013, and he sent this to me, in the last year or so, 10 years later. So when you look at the track record, and I talk about this in my book, you can literally go, and by the way, when we do Wealth Going Global, I'm actually going to go and reanalyze all these stats and research and everything so that I can literally, show people. But if you go and look, I'm going to show you where to get all the right information, all the right research as well. But if you look at the Australian market, if you look at the English market, and you look at the American market, and you look at when we started to invest in each one of the markets, if you get it right in one country, if you get it right in 2 countries, you might be lucky. If you get it right in 3 countries over the last 15 years, there must be something you're doing. And this is what this trend analysis is all about, and understanding the information and the data. When you look at the returns, in terms of alternative assets, and even comparing them, I saw Menno said about the stock market. If you take the stock market on average, it's returned over the last 25 years about an 8% return, but with a higher risk deviation. And when you compare it to private equity, it's had higher returns with lower risk. And yet, we've consistently returned about 14% IRR. So alternative assets have actually outperformed both in terms of higher returns with lower risk. But again, you've got to have the right information. You've got to have the right partners. So, we did this very interesting session with our mastermind participants and one of our partners, Calio, that's a family office. And, you know, if you want to go and look at the market synopsis for this year, for 2023, the top 19 banks around the world all do a synopsis. So there's all the links. You can literally go and read all of them yourself, or you can literally go and find the right information. So I don't know if you know what a family office is. I don't know if you've heard of what a family office is, but you know, what's interesting is that, and let me know, have you heard of a family office before? Do you know what a family office is? But it's really interesting here. A family office is a private wealth management firm established by ultra high net worth families that provide the family with selection of personalized services and investment management, financial planning, estate and tax planning, philanthropic investing, concierge services, and more. You genuinely need about $250 million to be able to have a family office. Now, I've worked with our family office for more than 10 years. And, you know, they were literally doing this report for our masterminders, and they were showing them all the different asset classes and how they've performed over the last 10 years and what the trends mean. And if you look here, it's really interesting. Like, take cash in purple. Look at our cash, like, has gone up and then it's gone kind of down. Or large cap in light green has gone up and then it's kind of gone down. Or what about commodities? Like, kind of gone up all the way to the top and now going down again. So if you know where to get the right information and you know where to get the right partners, then you can make the right decisions based on this trend analysis. And I think that is critically important. The second major lesson for me is risk. And it's, how do you manage risk? Because every investment that you do, even leaving money in the bank, is risky. And so I learned this through a story, actually. And again, in 2008, Barclays Bank was going bankrupt. And I know my uncle had money in Barclays Bank, and I phoned him. And I've already told you, my uncle is a very successful stockbroker and asset manager. And I said, Bill, what are you doing? And he said, no, he's investing in Coca-Cola. And I remember saying, well, why Coca-Cola? He said, well, think about it, Scott. They're in over 100 countries. They've got multiple different products. I mean, I love drinking Valpre sparkling water made by Coca-Cola company. So they've got multiple different income streams. They're completely diversified. But most importantly, they pay very good income. And I thought, wow, that's really interesting. And then I read a book by Warren Buffett called Snowball, and I found out that he actually owns 15% of Coca-Cola. And I thought, wow, here's the pattern. Middle-class investors and professional investors are trying to buy houses and Bitcoin and sometimes even, you know, gamble on the stock market, and they're hoping for capital growth. And wealthy investors are going after income, passive income. And I learned this personally. You know, in 2002, I was buying this house in England. England was going to war with Afghanistan. Oil prices were going up. Inflation was going up. Interest rates were going up. Sounds very similar to what we're dealing with right now. And all my mates said, I'm absolutely mad. We should never buy the property. But I persuaded my friend to buy it with me. And we bought the place. We spent £20,000 putting a conservatory on. By putting a conservatory on, we turned it from a 3-bedroom house into a 5-bedroom house. And it's been a positive income for the last 20 years. And what's more important is that we've ridden all the storms. No matter what's happened, even right now with the rising interest rate cycle and everything, we've just ridden the storms because you've got the income. And as long as you've got the income, you ride the storms. And then the capital growth is the nice sweetener on top, but it's the income that ultimately gives you your freedom. I then had this reinforced when we started investing in America. And, you know, residential property in America, depending on what city you spoke to, had like lost value of 40 to 70%. I mean, Las Vegas lost 70%. Imagine owning a house for $1 million, whatever currency you want to talk, and it's suddenly being worth 300,000, because that's what happened in Las Vegas. And yet the medical buildings just consistently paid their dividends all the way through. Now, don't get me wrong, they don't always work. And COVID came along, and suddenly doctors couldn't work. I know, because my brother's an anesthetist, and all they were doing was the COVID, you know, emergency surgeries. They weren't doing any of the elective surgeries. And suddenly all of the tenants you know, are the doctors and the radiologists and everyone around, suddenly they too. So I learned a very hard lesson because I thought that the medical thing was like 100% robust. And yet it's not, because no one saw COVID coming. And so medical, as an example, and I know a number of people that have really struggled in medical over the last 2 years because of the impact of COVID. Now, does that make it a bad investment long term? No, it doesn't. But if you had all your eggs in the medical basket, you'd be in deep, deep trouble. And that's why diversification becomes so important. Another good example was during COVID, many people were moving from New York and Chicago down to Florida, or from California to Texas. And one of our partners, Feldman, was buying up office buildings. They already own about $3 billion worth of office buildings. And they literally made these buildings COVID-proof and have paid a consistent dividend every quarter, you know, in terms of it. So again, it's all about the income and actually taking advantage of the opportunity. And a good example of this is a lady called Hilda. You know, she actually started investing with us in about 2013. She invested in the commercial real estate properties. It built up a very nice passive income stream for her. I actually managed to get her invited to Necker Island with Richard Branson. And interesting enough, she paid for that with the passive income that was coming from her properties. And ultimately, she immigrated to America in 2018, 2019, I can't remember exactly. And she was able to do that on the back of the passive investments that she was getting from her, you know, global asset base that she'd built up with the income streams. The third lesson is, and just by the way, I mean, who here would like to have one of these stories? Like, who here would like to be a case study one day? Now, it's not going to happen in 3 months. It's not going to happen in 6 months. All of these people were people that I was talking to 10 years ago or longer. So you need to future-proof yourself and say, well, in 10 years' time, am I going to be one of these case studies? The third lesson is diversification. And this probably for me is the most important one, because it's the single most important component to financial success. You know, Ray Dalio, and I've spoken already about Ray Dalio, literally believes that diversification is critically important across asset classes, within asset classes, across markets and currencies, and across time. And, you know, today I don't have a huge amount of time to go into all the detail, but literally he wrote this, you know, so Tony Robbins, where's the book gone? Tony Robbins went out and studied 50 of the wealthiest people in the world. Now, Ray Dalio runs the largest hedge fund in the world, $160 billion. And you could only invest if you had $100 million in cash. Now, I don't have anywhere close to $100 million in cash, so there's no ways that I would be able to participate with Ray Dalio. And his strategy, and you know, literally Tony Robbins persuaded him to share his strategy. And his strategy is actually quite simple. If you make 15 uncorrelated bets in an attractive array of assets that don't move in tandem, you'll reduce your risk by 80%, and you'll increase your risk-return ratio by a factor of 5. Now, I completely understand that that sounds like a huge bunch of words that you know don't even understand. Okay, and that's what I hate about the financial industry in terms of the lingo, because it confuses people. I'm not sure if it's done with intent, but actually all this is saying is that if you make 15 investments in good assets that are not tied together, so 15 investments in good assets that are not tied together, that's all you got to do. 15 investments in good assets that are not tied together. If you do that, you'll reduce your risk by 80%. 80% drop in risk, and you'll increase your return, your risk return factor by a factor of 5, which by the way is 500%. So who here would like to drop their risk by 80% and increase their risk return, so their return factor, by a factor of 5? Like, it's a no-brainer. Okay, and so the question is, how do you drop your risk by 80% and increase your return by a factor of 5? Well, you do it by copying the strategy. You literally do it by finding 15 quality investments in attractive assets that don't move in tandem.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
That was Ray Dalio on a TED Talk. I can share the link with you. And again, at the end, we'll share the resources of how you can get access to it. But I mean, that's what he just said there. And he said, you need to know how to diversify well. You need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the most important thing. Do not think that cash is a safe investment. Cash is almost always the worst investment. Think a little bit unconventionally, diversify well, be humble, don't market time, and be conscious of the dangers of cash. And that's coming from the man that runs the biggest hedge fund in the world. And so I want to share with you a couple of mistakes that I see people make. So I have a professional person that I know who I highly respect, and he has a house, a nice house, and he went to see his financial planner. He lives in South Africa, and his financial planner said, no, you'd be crazy to invest, offshore or, even in other investments. You should pay down your house. Like, that's what you should do. And, I sat with him, I said, but that doesn't make any sense. The Rand has lost on average 6% a year for the last 40 years against the US dollar. Now, I'm not here to predict what it's going to do tomorrow or next week, but I can tell you statistically that it is devalued by 6% a year for the last 40 years. And if you think that's a trend that's going to change, then I'd love to understand why. And I don't have time today to get into all the principles and the reasons. That's what James Painter does for our clients to help them understand it. But it's clearly a mistake, and I'm going to show you the mistake I personally have learned. The other mistake I see people make is they're like, well, I'm going to go out and buy 5 apartments from a new developer, and I'm going to make lots of capital growth. And I'm like, but you actually don't, because the properties, as an example, in South Africa, don't cover the costs. And so by the time you pay the difference, plus the rates and taxes, plus the HOA fee and the management fee and the sectional title fees and you generally are putting in money every month. Okay, so you're supposedly going after capital growth in a depreciating currency where you don't even have cash flow, positive cash flow, and you got all the hassle. I was like, why are you doing that? Like, it doesn't make any sense. But yet people do it all day long because that's what they've been taught to do. They've all gone out and they've read real estate riches, and they've been going to courses for 20 years. And that's what people teach you, because that was the old way of doing it. In my book, I spoke about the Global Wealth Index. And, as a global citizen, you should be looking around the world and saying, well, what impact are the different currencies going to have? How is it going to impact me? I don't have time today to go into this, and I'm going to share more of it when we go into Wealth Going Global. But I basically did a basket of goods. And when you look at the Global Wealth Index, the average South African has lost about 29.5%, compounded over the last 30 years. I'll give you an example of that. So this is a property that I bought, this property right here in the middle. It's on Teeson Island in Knysna in South Africa. Very, very beautiful property. And, when you look at the numbers initially, you would think that I'd done really, really well. Okay, because we bought the property for 5.5 million. And we invested 1.1 million in the 20% deposit plus the transfer fees. So we were all in for about 1.7 million rand. We just sold the property for 14 million rand. We made a profit, if you take off the mortgage, etc., of 7 million. And if you take off capital gains tax and the net between interest and what you would have paid in rent and sort of rates and taxes and costs, you're sitting at about 2.8 million, call it 3 million rand. And so you made about 161% return. Okay, which, over 10 years is about a 16% return. So as a South African, you look at that and I ask you, who here would have liked to have done that investment? That's a 10-year investment. So bought it on the 1st of August 2013 and sold it fairly recently. I know a lot of people that would love to own a house on Teeson Island, and as an investment, who here would like to make that type of return. But what was really interesting to me, and this is where I get interested myself, I went and did the research, and I was like, I wonder if that was the right decision for me to make, to buy this house, to buy this nice fancy house. And I basically went and did the research because I don't like opinions. So I went and did the research, and this isn't a formal document, it's just my workings. I went and did the research. So the day I bought the property, the rand was at 9.85 to the dollar. And the day I sold the property, the rand was at 18.19, so 18 rand to the dollar. You can see the breakdown of the final payment. So there you can see the 7 million. So again, people go, wow, you made 7 million, but actually you've got to take off all the costs that you've been paying over the last 10 years. Otherwise, you're not doing a like-for-like calculation. And what actually worked out was that if you take that exchange rate, I invested $177,000 back in 10 years ago. And if I now work out the profit and divide it by the exchange rate, I have $154,000. So I've actually lost money if I look at it in dollars terms. So in rand terms, it's like, oh, I'm a hero. And in dollar terms, I've lost money. Doesn't make you feel so excited, does you? Certainly doesn't make me feel excited. So once again, I've learned my own hard lesson. I literally did this last night for myself. And then it got worse. Then I went, well, what happens if I had invested 10 years ago in America, taken that $177,000, earned about an 8% cash on cash return, which is what we get, between 7 and 8% all day long. And with an IRR, which is an average growth of taking capital growth and income into account of about 15%. And I put that money in over a 10-year period, I would be sitting at about $460,000 now in asset value, which means I've lost $300,000. I haven't lost $20,000, I've lost $300,000, which is about 300%. So, yeah, I was sharing this with Shane last night while I was doing it, and it's just like, it just makes you sick. It actually just makes you sick because you think like, oh, I'm such a hero, I know what I'm doing, and here's a 10-year track record of a specific asset. And, this is what I like to do. So this is why I learned, and this is why we, wealth going global. It's like, cool, this is what I did the last 10 years. This is what happened. This is what I should have done. Those are the comparables, and this is the impact it has. And, not only can you do it yourself, but you can also future-proof yourself for the next 10 years. The second mistake I see people making is they say, oh, no, but I'm going to diversify. I'm going to go buy a house in London. I'm going to buy an apartment. I've got one tenant, I've got one management agent, I've got one income stream. I hear this all day long. And just by the way, I was with a very, very wealthy person yesterday. I'm not going to mention his name. 500 million pounds worth of wealth, just to put in perspective, 3 generations of families. And they literally, like, I'm not allowed to mention companies' names, but they've been helping people invest for 25 years in individual apartments in London. And they said the model's broken, it doesn't work anymore. And yet people are doing it all day long. And, you've got all your assets in one basket, and you literally are so exposed. It is unbelievable. The third one is where they put all their money with one particular company, one partner. And, this was a guy that I know personally. He invested in 8 hospitals in America, and none of them are paying a dividend, not one. So 8 medical buildings in America, but he went through one company. And so he's dealing with one company, one team, one income stream, one asset class, one country, and one currency. And so again, like, all of that is taken into account, in terms of that process. And so that's why I talk about diversification 5.0. And, when I look at it and I compare it, to those three different scenarios, and over the last 12 months, 12 to 18 months, I've invested in 10 different asset classes across 4 different continents, 5 different currencies, 9 different asset classes, and 10 different partners. And that's really, really, really important in terms of what we're talking about in terms of diversification 5.0. And so for me, I always say, if you've got $100,000 and you look at it and you're making an average return of like roughly 15%, what difference will it make to you over the time? And that's why I love to do graphs. What difference will it make to you if you leave your money in the bank in South Africa or Australia or New Zealand or America or England, versus investing in an apartment in London, versus investing just with one company, versus, one opportunity that really works, versus a actually diversified portfolio. And it's really interesting because a good example of this is a guy called Chad. He started investing with us in Australia in 2011 and 2012. And, from there, did commercial properties in America. And ultimately, he's actually bought even different asset classes to our platform. But I mean, he, lives with complete peace of mind, globally diversified passive income. And this for me is what becomes really important of what I'm wanting to share, with people and what we're passionate about. And, this was a webinar that we had back to that with Calio. And this is what they said, which was so important about portfolio construction.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to, produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So what he's basically saying there, 85% of your long-term returns come from your portfolio construction. So again, I've been talking all day. You got to get the right information and the right partners. Where are you getting the right information? Where are you getting the right partners to be able to do that? When you look at portfolio construction and you look at the impact of, as an example, private equity versus the stock market, whether it's 5 years, 10 years, 15 years, or 20 years, has a dramatic difference in returns. If you look at the average return, in terms of the blend of portfolio between bonds, stocks, private equity, etc., again, the majority of people are in bonds and stocks with no private equity, and look at their average returns, in comparison with what others are doing. When you look at the stock market alone, when people, just the average on its own, so literally put it through an index fund, has done 9.5% over the last 20-something years, 20 years, according to JP Morgan, whereas the person that's tried to do it on their own, 3.9%. And then for me, I then went, because someone actually asked me, they said, well, Scott, if I'm going to join the mastermind, would it make sense? And I was like, well, that's actually a good question. So you take all those returns that I just showed you, all the different annualized returns, etc. And I said, well, okay, so, if we've kind of been performing about 14%, and, if you look at private equity is traditionally been sort of between 15 and 20%, and the stock market's been around 8 or 9%, and you take a blended return of, roughly 14%, so this particular gentleman actually said, well, I said, what are you getting? And he said, no, well, I'm getting about a 7% return through a very well-known, company. And I said, okay, well, if you're investing $1,000 in a month, $12,000 a year, and you literally take that and you invest, over 1 year, then, the difference between that is about $408. Now, if you were going to invest, $5,000 to be part of something like a mastermind, it wouldn't make any sense because, you, in today's value, you're going to invest $5,000 to make $300. That doesn't make any sense. But if you were to do it over 5 years, you'd now be investing $5,000 to make $11,000. Like, that's a no-brainer. If I said to someone, you can put $1 in to make $2, like, it's a no-brainer. And what about if you do it over a 10-year period? Now you're putting in $5,000 to make roughly $50,000. and I'm talking in today's money, I'm not talking future money. Okay, and then finally, I believe most of us are investing for generational wealth. So, certainly in the next 30 years. And now the numbers really, you're investing $5,000 to make in the region of $750,000. And this is where it becomes significantly important to understand the future value of having the right information and the right partners in terms of, where you're actually at. So the fourth lesson, and I'm conscious of time here, the fourth lesson is structure. A lot of people believe that tax planning and structuring is really important, and it is. I think the myth, though, and myth number 10 that I've learned is that people go off to these fancy little islands, be it the Seychelles or Mauritius or the BVI or something. They often deal with a company that puts them in a box. They sell them the box, and then they basically, only sell them investments that fit in the box. And when you're dealing with a family office, they don't. They say, right, what are you looking to achieve? What is your objective? And they help you build a bespoke plan. And a great example of this is Manu. Manu was an investor. He invested with another company, and they defrauded him, in excess of $250,000. And so it's not always how much you make, it's also what you can protect on the downside. And he started investing with us a number of years ago and actually became a shareholder. And it just shows you the power of getting the right information and having the right partners. So a question I've got for you is, are you feeling overwhelmed? I've literally shared a huge amount of information with you, and I tend to joke with people, it's very much like, drinking from a fire hose. And I'm sorry, I'm passionate. I've been doing this now, literally 25 years. And what I try and download is all the information in my head in like an hour. Okay. And it's really, really hard. And so if you're feeling overwhelmed, I completely understand that. And I think what's important is that I need to ask you 3 questions. So I started off the presentation today saying, what would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? And can you see now that there's a formula and a strategy that people are using to achieve this? The second question I asked you is, how would you like a system to help you get there 5 times faster, simpler, and safer? And I've shown you people have done this. We've helped people do this for 20 years now. And so I've got a third question for you. And that is, can I make you an offer? Can I share with you a way that you too can safely and simply do this in the next 12 months? And, I'm not going to do it without your permission. But for me personally, I'm all about getting people results. And so how can I help people get results? And I want to share with you, how you too can do that. And I just need your permission. Can I have your permission to do it? Yes or no? So Paolo, thank you. Debbie, thank you. Albert, thank you. Andy, thank you. Gwen, Tammy, brilliant. Okay, well, let me share it with you. So for me, it's all about living a life unlimited. And how do we do it? Diversification 5.0. What's critically important is we've got to diversify across countries, currencies, assets, partners, and time. There's 5 things that you have to diversify across. It's the 5 fundamental pillars. And that ultimately creates your diversified global passive income. And when you achieve that is when you achieve your freedom.
No, this is extremely predictable. There's tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So, for me, I've been doing masterminds since 2010. And I was thinking to myself, well, I mean, this is how you do it. This is the formula. This is how you achieve it. And as you said, real rapid, transformation, and you get the results 5 times faster, which I think is critically important. And so that's why we created the Diversification 5.0 Mastermind, to help people get their results 5 times quicker, simpler, and safer. And who is this for? Well, it's for people that are already into personal development. It's for people that can be coachable and can work together and achieve results. People that want to get the right information and get access to the right partners. It's for people that want to build passive income. I'm not interested in people that want to do crypto mining or, I'm not saying you can't do that elsewhere, but that's not what we're doing. It's not about fixing and flipping. It's about building globally diversified passive income, and with a minimum of $5,000. And then it's also people that have already got started. This is not a beginner course. So this is for people that have already got existing property or existing portfolio, like of maybe a share portfolio or something. But the point being is that they've got started. Like, those are the 3 criteria that I'm looking for in terms of the process. But most importantly, I'm looking for people that are committed to wanting to get there, in the fastest, safest, simplest way to be able to achieve that. And I think that becomes, really, really important, and equally without hassle or complexity. That for me is what becomes really important. Who's this not for? Well, it's not for complete beginners. It's not for time wasters. It's not for people with no capital. And it's not for difficult personalities. You and I have to work together very much in a personal environment. And so for me, I personally interview every single person to make sure that we can achieve the results together. Because ultimately, what I'm fixated on and passionate about is helping people diversify across countries, currencies, assets, partners, and time, and to build globally diversified passive income. And how do we do it? Well, we do it in a 5-step process. So there's a setup. It's sort of the first week or 2 where we get very clear on the outcomes. So you and I will sit down and we will get very clear on the outcomes you're trying to achieve. Then we'll figure out what is your starting point. We'll then build a wealth plan. So this will be your personal wealth plan. And then it's all about execution and results. Most people have a plan, but they don't actually have a way to execute. There's great research out there. 9 to 12% of people keep their New Year's resolutions, and that's if they're written down. Less than 4% if they're not written down. There's literally a formula that you can copy to get there 5 times simpler, safer, and faster. And then finally, it's the investment rhythms, and ultimately, about achieving the outcome. So 5 simple steps. I believe the complexity kills things. And ultimately, if you look at it, so let's just go in a little bit more detail. If you go to the outcomes, I'm a qualified, certified coach. I've done my global training. And so I take people through a one-to-one process where we get very clear on what are their top 3 outcomes, what are their top 3 measures, and we write everything down with them. And, where most people are is they get caught up in the problem and the drama, but you've got to start with the outcome. We call it the lighthouse approach. And we have a process or a way, a methodology of going through it. And I mean, this guy is a coach himself and has been doing it 27 years out of Germany. And he actually sent me this. He said, Scott, I love the process in terms of how you do it. Step 2 is the starting point. That's where we do a review of your current property. I work very closely with Callio. So although people generally needed $250 million to participate and have a family office, everyone that's part of the mastermind actually partners with us and with our own family office. So I work with Garth and his team at Callio. And the reason they work with us is that they say the 1% can pay for advice and get results. We need to support everyone else to get access to the same advice and results. So they got about 60 families. They manage about $600 million. But through the mastermind concept, they've agreed to work with each one of our clients in terms of this process. So it's hugely exciting for me because we bring a lot of value to the table, but they bring a whole bunch of other value in information and partners, and 1 + 1 can equal 3 from a synergy perspective. Then together we create that wealth plan, which is the personal plan to get you from A to B as to where you want to be. And, this becomes really important. This is the simple wealth plan that we work on, and Callio actually works on a more complicated version. And then it comes down to the accountability and the execution. And this is where it becomes really important, because if you take with where the world is at the moment, if you listen to the press or talk to your friends, often people get within a withdrawn, fearful, state, demotivated. And it's all about being in a towards state, happy, creative, see new opportunities. And how do you do that? Well, it's about the mindset. So we've got the mastermind, we check in every month. Time is your most valuable asset. So we keep it short, concise. And, there's different modules, time management, mental wealth, flow, which I can go into more detail if people are interested in. But what's really important is the accountability tracker. So we actually have a methodology and a way of ensuring that you're getting your stuff done on a monthly basis. And we've actually got an accountability coach as well, because execution is what's going to get results. And for me, 99% of individuals who have a coach report them to be helpful. 95% of those reporting that it's been very helpful to them. 96% reported that they would engage in coaching. So it's critically important that you've got accountability to be able to get your results. And then the fifth one, it's about the investment rhythms. And there's 5 investment rhythms. So the first one is a financial understanding. Each month we take one asset class and we go in a deep dive. So we've done structured notes, we've done multifamily, we've done medical, we are doing industrial this month. And it's critically important that over a 12-month period, you're not going to be an expert in every asset class, but you're going to have a deep understanding of each asset class so that you can make educated and informed decisions for yourself and your family. A good example of that is then also what's happening in the markets. So we work with Callio on the market stuff and with James Painter on the currency stuff. And it becomes really important because you want to be able to know what's going on. But if you're anything like me, you don't want to spend hours and hours researching it. Like, I just want the TED Talk. Like, give me the 15-minute, 20-minute overview of what do I need to know about the market. And, last month, as an example, they were talking about Silicon Bank and, and what's happened in Switzerland and where the bank's related, in terms of UBS and, blah, blah, blah. And it becomes really, really important to know this stuff, including the currency analyses. Then that helps you with your portfolio construction. And what's really important is I've already, shared with you, 85% of your returns are going to come through your portfolio construction. Then finally, it comes down to your investments, doing a deal analysis in terms of, and I'm going to share with you something we did just 2 nights ago, and then ultimately reviewing your portfolio and tracking your process. And, for me, this is the stuff that is so important in terms of the 5-step process that the mastermind. And then after a year, you return to step 1 in terms of that process. So, like I said to you, there's 3 types of people. You can do it all on your own. You've got about a 10% chance of success. Trust me, I did that until, 2012, 2013, 2014. And it's just difficult and hard. Then you can do it together, and you kind of got a 30 to 65% chance in a big group, like a one-to-many group, like our wealth hackers. Or you can kind of be part of a mastermind. And it's all about knowledge transfer. It's about, making sure that your time is your most valuable asset and getting results quickly. And for me, you've got a 95% chance according to Harvard. A couple of other bonuses for people that are part of the mastermind. They get priority access to myself and the team. They get access to our tax and currency partners. They'll get access to the previous, resources in terms of learning about a structured note, learning about multifamily, learning about medical office. And for those that, want to participate, we actually are doing industrial and logistics in 2 weeks' time on the 17th of May. You'll get access to the wealth hackers. So you'll get all this for free, just so you've got access to all the substance, all the reports and the, everything in between in terms of that process. For those that are looking to immigrate possibly one day, you'll get access to all the top immigration, people to assist you. And then finally, we haven't done a buyer's trip in many years, but, we do have the intention of doing trips again and people being able to get access. So how does someone apply? It's very simple. You go to the link, diversificationmastermind.com. There's a couple of time slots in the diary. I know there's one this afternoon. There's a number tomorrow. And you set up a one-to-one call. It's about a 30-minute call, and it's an application call. You and I are talking one-to-one. I'm trying to see what you're trying to achieve. Okay. I'm also trying to identify what your risks are, what your concerns are. I'm trying to see if you qualify. And then I also am trying to make sure that I can help you. So I only want to work with committed investors where we kind of respect each other's times, etc. So obviously it's a your understanding, whether this makes sense for you. I'm understanding whether I think we can help you. And it takes 30 minutes. I do all of them personally. It's really, really important. Now, I don't have a lot of time. And one of the big constraints that I've got in this process is that I can only onboard, with Calio because of, respecting people's times, etc., 5 people at a time. At the moment, we've only got 3 slots that are available. So that's why we do this webinar sort of once a month, depending on, how much availability we've got. And there's only currently 3 places available for next month in terms of this process. So I'll be interviewing people. As I said, there's 1 slot this afternoon. There's a number of slots tomorrow. I'm then off to Cape Town on Sunday, and I'm actually on a course from Tuesday afternoon through to Friday. So I highly recommend that if you are interested, we try and talk today or tomorrow, because I really would like to get you going. And the industrial webinar that we've got coming up in 2 weeks' time is really not something that you want to be missing. And what's interesting is the average person will see a return of investment of roughly 344% from coaching, and businesses can expect over 700%. So, in terms of return of investment, and I remind you again of this spreadsheet here. If one looks at an investment and you say, well, is it worth me investing, my time and my money in doing something? What will it mean to me over a 1-year period? What will it mean to me over a 5-year period? You're talking significant money over the next 10 years. It's the difference of like roughly $50,000 to you. And so, over 30 years, it's $750,000. What would you invest to be able to get access to the right information and the right partners? So, one of our guarantee satisfaction is that, it said in that little video, you've got someone who's prepared to jump in the trenches. Well, that's me, and that's the team. And our objective is to get people results and to kind of do whatever it takes. I can take a horse to water, I can't drown it, but trust me, I'll do whatever I can to help you try and get the results. And so, when I look at that return on investment, if you're investing $1,000 a month, and you were to invest $5,000, yourself in making sure you get the right information, the right partners, over the next 5 years, your return on investment would be 250%, over $12,000. Over 10 years, it'd be 1,000%, over $50,000, and over 30 years, it would be, close to $1 million. And, for me, it's a no-brainer. And people say to me, oh, but I'm not investing $1,000. I've already got $50,000 or $100,000 to invest. And, my point being is that, what's the difference? It's the same, whether it's an amount per month or whether it's a fixed amount of capital up front, or you've got capital sitting in other properties. How much is it costing you to not get access to the right information and the right partners? And so my recommendation is, if you're interested, go to diversificationmastermind.com. If it's not working for you, just write in there mastermind, and the team will reach out to you and we'll book a time that's convenient to you. Or if for some reason you're in a different geography, we've got people all over the world. That's one of the things I love about the mastermind. We've got people in England, in Europe, in Germany, in Italy, in South Africa, in Zimbabwe, in Australia, in New Zealand. There's a gentleman that's looking to join from Mexico. So it's really, we've got such a nice, diverse geographical base. And what's beautiful is that you're learning about all the different areas. And we've got everything from entrepreneurs to farmers to, there's a plumber involved. So you've got people like with all different perspectives coming in, which is fascinating. Like, I love the broad diversity and of everyone. So if you're interested, go along to that link and book a call. And as I say, we only want to work with committed investors, or as I said, just type in their mastermind if it's something of interest to you. I just want to show you some pictures of how we used to do it 10 years ago. This was us in New York 10 years ago. It was freezing. This is us in Times Square. This is funny enough, me with Dolph DeRoos on the steps in Phoenix, buying properties in the last crash. going into the Grand Canyon, having some fun at the bottom of the Grand Canyon, going to some shows, buying houses in Atlanta, looking at multifamily in Florida, opening bank accounts. These were the old days. These were the difficult days where you had to go and do all of this yourself. And you had to get on a plane with me, and it took months and if not years to be able to invest. And it's all changed now. This was getting access to the right information and the right partners. You need to come on a plane with me to America and meet the right partners and get the right information, and come to dinners and lunches and breakfasts to kind of meet the right people. And we also had a bit of fun in the process. This is us on Beale Street. This is us outside the stock market. This is us up in North Dakota, which is where they do all the fracking, and even having some fun when they had what's that thing at the end of October, Halloween. So for me, whether you're dealing with highly sophisticated investors, these are some of the wealthiest investors in the shopping market area. They were coming to get the right information and the right partners. And the best part now today is that people don't have to fly around the world anymore. They can get access to the right information, the right partners without traveling. Why do we believe you should work with us? Well, most people have a lot of things going through their head. It sounds too good to be true, too much compliance. I don't know how. There's too many scams. What about management? There's a lovely Afrikaans saying, which I can't speak very good Afrikaans, I'm not going to lie. Na van my goed ver aan my skade. And, all of these things. And I believe that, if I look at the three biggest myths, I don't have the time, I don't have the money, and I don't have the knowledge. Well, that's what we are solving for you. If you're a highly busy person and time is your most valuable asset, this is about condensing time. This is about giving you access to the best information in the shortest possible time with the best partners. If I don't have the money, well, sometimes I say to people, can you afford not to? And if you don't have the knowledge, well, this is, what we're doing with opening, you to the best knowledge that we can find over the last 25 years. The other reason we believe that you should work with us is that we're the only ones doing it in terms of global diversification. So there's lots of people that can help you invest in a medical building in America, or a multifamily building, or a house in London, or a stock market, or something in Australia. But no one's actually helping you globally diversify and truly do what Ray Dalio is teaching people. And again, what Ray Dalio does for people with $100 million plus, we now are helping everyone else. And to my knowledge, we're the only ones that A, have a 20-year track record doing it, but B, can actually facilitate and help people. I've been part of masterminds for since 2010. Like I said to you, I paid $14,000 a year to be part of Singularity University, which is all about technology. I paid $20,000 a year to be part of Roger Hamilton's Entrepreneur Network. I paid $40,000 a year to be part of Mavericks, that actually got me to go to Necker Island and spend 2 weeks with Richard Branson. And I spent $50,000 a year being part of Tony Robbins' mastermind. That was actually me in Fiji with him. So, again, I'm a big believer in investing in myself and seeing significant returns over time. So the final lesson, and I want to share with you a final lesson, is the team. And, traditionally, this is how you could invest. It was you in your offshore investment, and you would go through a financial advisor or a financial institution or even a REIT. And there's a lot of problems with this. There's a lot of costs. There's a lot of dilution and a lot of risk. Or you could try and go and buy a house yourself. You were dealing with 16 different middlemen, high barriers to entry. It was very, very difficult. And so when you look at a team, if you want to do this all on your own, you must do your country due diligence, your sponsor due diligence, your lawyers, your brokers, your tax, your family office, your deal tracking, your data storage, your lawyers, your management agents, your banks. I mean, I could go on and on and on. Or you could follow 4 simple steps. You could literally, use technology, smart investing, join the mastermind, and ultimately achieve globally diversified passive income. This is, we were taking people through the process of, something that we've evolved. And, when I wrote the book, Property Going Global, we developed the GID system, the Global Investment Due Diligence System. And by the way, when we do that webinar, Wealth Going Global, we're going to update that and take people through it. But it was all about residential. We then updated that to GIDS 2.0, which was all about commercial. And what I realized with myth number 8 is that people again think that they can, should do this all themselves. And I'm like, well, why? Like, why would you not get access to the right information? Firstly, know where to get the right information. And secondly, how to find the right partners. And, I've personally, along with the team, spent millions and millions of dollars in the last 20 years, finding out where to get the right information and where to find the right partners. And a good example of this was there's a deal in Phoenix at the moment, an industrial deal. And we literally were taking our mastermind. This is not open. There's not enough time to do this through the platform. So this is going to be only for the mastermind. But it's got a 7% cash on cash, a 17% IRR. It's a 3 to 5 year hold. If you put $100,000 in, you'll look to double it in 5 years, which is a 2x equity multiple. Roughly about a 20% return, and closing at the end of May. And this is one of those things where it's off market. It's unique, it's specific. But what's also important is that for people whose time is valuable, there was a webinar, there was a 28-page prospectus, there was a 3-page fact document. I went and researched it all. And with the mastermind, participants, I got the partners involved. We did a Q&A on Tuesday night. We literally in less than sort of 30 minutes, I summarized everything about the deal. Oh, and by the way, I also put it into global English because the Americans can speak a huge amount of lingo. So I often translate it so that people can understand. And then we did a Q&A with the partner. And that's what I truly mean by having access, and having a team. It's you don't have to do it all yourself. Like I said to you, you can try to do it all yourself. I did it for 14 years. It was so difficult. Or you could go out and get the right information and the right partners and make your life a hell of a lot easier. So, back to the family office, something else that I think is so valuable as part of the mastermind is that Callio are part of the mastermind. And so they, are part of your team and they're helping us with access to the right information and what's going on in the markets and tax and structuring and everything in between. So, another example of this, of someone that relied on team, was a guy called Alan, a very, very wealthy and successful, developer, property developer, real estate developer. Came on many, many trips over to America with us. He met the right partners. He got the right information. He's actually now looking to immigrate to America. He's even doing projects on his own now. But that's exactly what you want, is the knowledge transfer once someone has done it. But he realized, why go learn all the mistakes himself when he could partner, with people that had already done it. And so my question to you is, whether you're looking for wealth protection, plan B, peace of mind, diversification, freedom, global citizen, empower your children, immigration, whatever it is, live a life unlimited, why not join over 4,000 other investors that we've actually helped go through this process with? And that's my invitation to you. How do you do it? Well, book a call, literally what we're looking to help you achieve is, how do you diversify across countries, currencies, assets, partners, and time? But specifically, how do you build a globally diversified passive income 5 times quicker, simpler, and safer? So if that's something that resonates with you, I know that Shane's put the link in the chat box. That's what the mastermind is all about. It's a system, it's a formula to help you get there 5 times quicker, simpler, and safer. If you are interested, like I said to you, it's a 5-step process. I would book a call in a one-to-one environment, and you can literally, I'll take you through how it works, how we set out the outcomes, how we get clear on your starting point, your property analysis, how it works with Callio in terms of the process, how we help you develop your own personalized wealth plan. And then ultimately it's about the execution. And this is where I've even learned, even with our current masterminders, it takes some time to get the momentum and to make sure that people have the right mindset and frameworks. And that's where, when I learn, areas like time management, or we had a psychiatrist come in and talk about mental wealth and flow, they add-ons, they're different parts and pieces that we consistently looking for ways to help people achieve their results, basically. But what I've learned, and again, I copy this from Roger Hamilton, it's the accountability tracker and the execution and the accountability coach that ultimately is going to help you get your results. And then finally, it's about the investment rhythm. And as I say, there's a 5-step investment rhythm to help people get access. But most importantly, it's getting the knowledge and then getting the right information and the right partners. And so that's how it works. You get to decide if you want to do it on your own. You've got a 10% chance of success. If you want to do it in a group like the Wealth Hackers, you've got about a 30 to 65% chance of success. If you want to do it as part of a mastermind, you've got more than according to Harvard, a 95% chance of success. And again, I remind you of a return on investment, because if people are looking at, what it takes from a return on investment perspective, it is really, really important when one takes into account, what does it mean to you over the next 5 years? What does it mean to you over the next 10 years? What does it mean to you over the next 30 years? So, as Alex says, one of my partners says to me, are you going to be here 10 years from now watching another webinar with Scott, or are you going to be one of the case studies? Because that's the difference. It's the people that make the decisions that get the results. 10 years ago, Michael Honey said, had never invested overseas. He'd never been to America. He didn't trust us. He was like, oh, what am I paying for? And how do I know that you guys know what you're doing? And 10 years later, he says the best money he ever invested. So, what does that mean to you? And are you going to be sitting 10 years later going, I wish I'd done this? I'll be honest with you, even that property on Teeson Island, I'm like, really? Maybe I should have just taken that money and invested offshore. The worst problem is I brought that money from overseas to buy the house. Anyway, and I remind you of the bonuses: priority access, access to tax and currency partners, priority access to myself, structured note masterclass. By the way, that's an asset that most people don't even know about, that's returning anywhere from 10 to 15% in dollars, pounds, and euros. Multifamily, best performing asset over the last 10 years, if you take a risk return adjusted. Medical, done really well, for the entire time I've been investing, other than the last 2 years with COVID. But it's really important to understand where the market is now and where the opportunities lie going forward. The Wealth Hacker subscription, access to the top immigration partners, when we start buyers trips, first access to the masterminders. And then finally, how do you apply it? Well, go along to diversificationmastermind.com. If for some reason it's not working for you, literally just write in there mastermind and we'll assist. Debbie, no, there's no cost for the application. I sit with you. The cost is your time and my time, and we literally sit with you. And as I say to you, it's an application call. I'm literally trying to understand what it is you're trying to achieve. I'm trying to understand your needs. I can explain what we do. I certainly can't help everyone. That's not the intention. And that's why it's a one-to-one application call, where I'm trying to make sure that I can help you and that also you're the right person, because it's all about synergy in terms of that process. And, I just got some more fun pictures of how we used to do it in the old days when we'd go on these trips. This is us, again, Times Square, in our ice hockey rink, Madison Square, outside the stock exchange in New York, buying medical buildings in Atlanta, houses in, I don't even know where that is, having a bit of fun in the process. Again, learning from partners, getting the right information and the right partners is absolutely critical. Watching a bull thing in Texas. This was a beautiful building we bought and sold in Atlanta. This was actually us with Dolph DeRuis, sitting around an investment committee meeting. I mean, yes, as I learned so much information. This was nearly 10 years ago now, which is what we're really trying to share with this mastermind in terms of getting access to the right information and the right partners. This is Dolph and a guy called Paul Shalanda that helped us invest in our first 7 medical deals. Very, very good guy. His partner, Bruce Saunders, is the one that just gave the masterclass this month, actually, on medical. And we're actually looking to bring a deal with him as soon as possible. This was another big medical commercial deal we did. This was us in Hong Kong, dealing with partners and looking at opportunities there, and more commercial deals. But I think you get the point. You can fly all over the world, which is what you had to do 10 years ago, or you can literally now, deal with people online like we're doing today. And I can give you, with our team, access to the right information and the right partners. As a bit of bonus, for those who are still here, congratulations. We will share with you some links of a global market review. There's a bunch of short videos. We've cut it up. on, what's happening with the market, where's it going, what are the risks, what determines 85% of your return, why private equity is so important, and this is only stuff that used to be shared with family office clients that now is being shared with our participants. So this is the link to the bonuses. If you literally go to diversificationmasterclass.com/bonuses, you will get access to the market review from Callio. You'll get access to the Ray Dalio webinar. You'll get access to the Ray, which is the one where I did a wealth hack. You'll get access to the TED Talk. You'll even get access to my book, Property Going Global. I do remind you that for me personally, this is something that I enjoy the most. So when I talk to people one-to-one, I do really ask that you turn up on time, and we can make sure that I can help you and get you the results. Unfortunately, we can only onboard a couple of people at a time, and we've only got 3 slots available for the next month in terms of the process. And for me, it becomes really, really critical, in terms of helping people get their results. And then my final reminder is that Shane has twisted my arm to redo Property Going Global. So 10 years ago, it was in hardcover format. It's now going into digital so that we can update it. And we'll be doing that on the 16th of May. So sign up for that if you are interested. I'm excited about it. Shane is really, really pushing me because, again, it took the best part of a year to write a book. And what he's making me do now is take all that research, update it. It was all really based on residential, 16 different countries around the world, but now involving everything we've learned in the commercial space, plus the other alternative assets. So I'm loving it. I'm enjoying being pushed as well in terms of this process. And I think really it leaves you with one final thought. There's an African proverb that I love. If you want to go fast, go alone. If you want to go far, go together. And so again, I remind you, you can do it all on your own. And you might go faster in the short term. But if you get the right information and the right partners, you're going to go a lot further in life. And that's just my own personal experience in terms of that process. So, yep, that's everything from my side. I thank you very much in terms of the process. It's always an honor and a privilege. I will leave that screen up. I want to basically just go through if there's any questions that I haven't answered. So Dawn said, I'm already on the mastermind, need to catch up on where I've missed sessions and information. How do I do that? So Dawn, just reach out to Alex. You should have his details or even me, and I'll put you in contact with Alex. Alex is working with me as an accountability coach to make sure that you've got access to all the right information. This is the point, Dawn, that all of us are busy. You've been an awesome participant in the mastermind. But for me, it's really about making sure that we get that measurable progress in terms of that process. So that's really, really critical. Debbie, thanks for the compliments. And I think you said I'm seeing you in the thing. So thanks very much for that. Please share the presentation from unknown. I can't share a presentation with unknown in terms of the process. There will be a recording, I think. Why must one own property as a prerequisite to get on the program? You don't have to own property, Busani. I think the important point is that I'm just looking for the right type of person. So there are some people on the mastermind that don't own property, but I do want you to already have some capital. You are going to need to make an investment, not only in yourself and the mastermind, but the passive income will be built by investing in assets in terms of that process. So it's just something that for me, I'm just trying to help the right people get the right results. But we've got everything for everybody. Reach out to the team, and we've got the wealthuniversity.org. You can go there. There's loads of information for free. People can literally get started no matter what stage. Lots of thank yous for a great session. I got disconnected for a brief moment. I think I missed the part where you were saying who does or doesn't qualify. Cabello, I'm not sure if you're still here. Again, reach out to the team and we can help you. What's the required starting point to reach 5K? So again, unknown, if I knew your name, I could answer you. But again, it's all about building a wealth plan. Different people have different starting points. So in terms of the capital you require and all the monthly investment, that's all part of the wealth plan in terms of the process to help you, achieve your objective. I can see there's lots of yeses to people that would like to ultimately be a case study one day. Craig has gone. Menno, why on my primary residence? Because I owned everything in a trust. So I took Hannes Dreher's advice years and years ago. Everything's owned in a trust so that I couldn't have my assets attacked. So if you took your money out of South Africa based on a bond and moved that cash offshore into a solid income generating asset in a hard currency, then service the bond locally, would this be a better move? Kerry, good question. Not going to answer it publicly. You are part of the mastermind already. It all depends on the numbers. So that's why, your next step, you're at step 2, which is all about the starting point and then building out your wealth plan. So Menno said he's been investing for the last 6 months with index trackers, a lot of value with Ann Wilson. Completely agree. So Ann is amazing. I love Ann and what she teaches. So, you should be diversifying. You should have some of your money and assets in the stock market, and Ann is amazing at teaching people how to do that. Yeah, Craig said you needed the pain to have the epiphany. I think that's all of us in terms of the process. Albert said, my boys need to watch this. I think that is everything. Let me just check here. That's where everyone was from. I've missed a few down the bottom. Thanks for all the kind words. I appreciate that. What's the minimum capital to start? So Bonani, once we got live deals on the Wealth Migrate platform, the minimum investment was $10. We don't have any live deals at the moment. But yeah, so there's different things that we've got to help people at different levels. At the mastermind level, there's not a minimum capital investment in deals, but there is a minimum capital investment in being part of the mastermind. Brendan's asked, can you help set up a trust or point us in the right direction? So yes, Brendan, I mean, that's what we've been doing for 20 years. I don't personally do it. That's why I always say to people, access the right information, the right partners. People that are part of our mastermind get access to Calio, who are the ones I recommend the most. And I mean, they literally help the wealthiest people to be able to achieve it. And, Brendan, I think what becomes important is, what are you trying to achieve? What are you and your family wanting to achieve? And then bespokely building a solution for you. Can I replay to listen again? Family investment is coming up for reinvestment. So Augustina's completely, we'll share the recording with you. And I'm happy to talk to the family. You'll be surprised how often people on the mastermind might be a husband and wife or 2 partners. It's a journey. We here to help people do generational wealth. And so, that becomes quite important. In terms of the family, etc., in terms of the overall process. Okay, and then onto the Q&A. Okay, I think I've answered all of the Q&As. They were also in the chat. Shane, anything from your side that I've forgotten? Shane's my business partner. He's far more intelligent than me, so he always reminds me if I've made any mistakes or anything that I need to point out.
Nope, you've checked all the boxes today, Scott.
Okay,
Well done.
Thanks, Shane. No, I appreciate for everything that you do on team. Tammy said, would this be something for US person living abroad with all the associated complicated tax and investment guidelines? So yes, Tammy, that's from a mastermind perspective specifically. That's why we have set this up. We've actually got a US citizen that's part of the mastermind who lives in Italy. Yeah, so Menno, with regards to the platform and from an investment perspective, we literally are on the brink of being able to get that live again with the new live deals on the platform, etc. And we're actually trying to plan at the moment to give a full investor update in terms of when the platform will be live again. As I said, that industrial deal, unfortunately, we're gonna have to do off platform. Because we literally got only a couple of weeks, so we've only been able to offer it to the mastermind participants. Tammy, I'm not sure what you meant, the associated, but yeah, look, I understand that there's a lot of tax consequences and investment guidelines. Calio actually have a license in America, and they help a lot of families that have done, the financial immigration, etc. So effectively, they're American citizens now. So they'd certainly be able to assist you in achieving your objectives in terms of that process, which is why I work with them. My philosophy in life, and you've probably heard me say this all day long, I don't have all the answers in life. I don't know all the answers. But what I've tended to find is, where do I get the right information and how do I find the right partners? And, for me, that's what's critically important here, is not me knowing all the information, but how do we get the right information? How do we find the right partners? So Andy, what I'd suggest you do is let's book a one-to-one in terms of if you're interested in the mastermind, and I can take you through the different options of how it works and whether you qualify and whether we'll be able to assist you in terms of the process. Okay. I know that I have a 2 o'clock meeting. So I probably need to call it. I can see that Shane has put up the link there again to the diversificationmastermind.com. If you are interested, just go on there and find a time slot. If you can't find a time, I know this happens because I'm busy, you're busy, time zones around the world. If you can't find a time that suits you, just type in their mastermind, or even reach out to the team and let us know. So if you type in their mastermind, then the team can reach out to you and find a time that suits you and I. Next week's not going to work very well for me because I'm out of action Tuesday afternoon, Wednesday, Thursday, and Friday, which is why we're wanting to do them this afternoon and tomorrow, because we don't want people to miss the industrial one. Tammy, thanks for the kind words. I appreciate that in terms of that process. In terms of right. Any other questions? Oh, I can see there's another one in the Q&A. So Anonymous has asked, do we invest in startup tech ideas and businesses? Not ourselves. So again, we would go and get the right information, the right partners. We've done 3 venture capital raises on the platform, but with qualified partners. So yeah, not directly, through partners. Okay, Augustinus, thanks very much. I'll make sure the team gets back to you to find a time that suits you and I. And thanks for all the kind words that are coming through from everyone. Perfect. Well, I'm going to summarize and finish off for you. I just remind you that we do have a session coming up where we'll be basically doing Wealth Going Global, which will be the upgrade of Property Going Global. And we're doing that on the 16th of May. And I think really, as we finish off today, I am tired of people coming to me and saying, Scott, I've been watching you for 10 years. I wish I'd taken action. And, that's why I love the African proverb. You can, if you do it, yourself, you can go fast. Supposedly people think that in their minds. But actually, if you do it together, you can go a lot further. And so, If you don't get the right information and you don't think that we are the right people to give you the right information, the right partners, that's fine. I don't mind about that. But just make sure that you do get the right information and that you get access to the right partners, because it'll make a geometric difference to you over the next 5, 10, and I mean, literally 5, 10 years, forget about, 20 or 30 years. And that is, as they say, is everything. And if you're interested, there are my contact details in terms of reaching out to me. Perfect. I think I've answered everything. I'm going to stop sharing now, and I will stop the recording as well.